I'd just like to begin by acknowledging the Wurundjeri Woi-wurrung people of the Kulin Nation and, as the traditional owners of the lands on which our organisation is based. We pay our respects to their elders past and present. As the FCVic team and financial counsellors work remotely across many lands, we extend our respects to the elders and other Aboriginal and Torres Strait Islander communities throughout Victoria and Australia. We recognise the continuing connection that First Nations communities have to land, water and sky. I do have an apology to make. We had arranged for Wurundjeri Elder Colin Hunter Jr. to join us to deliver a welcome to country, but unfortunately Elder Colin was unable to attend due to some unexpected disruption affecting transport into the city. So we're very excited to welcome all of you in the room and to the 120, 130 people, the numbers go up as we speak, who registered for our live stream to participate in the launch of our event, of our report, Unsettled, Climate Risk and Cash Settlements in Home Insurance. So welcome to you all and welcome to you online. The Unsettled report is a major piece of work for us, for our members, for our profession, and we're grateful to be able to share it with you all today. I understand that we also have a couple of registrations from New Zealand, so this is actually an international event. Financial Counselling Victoria is the peak body for financial counselling in Victoria, supporting the continual professional development of financial counsellors, promoting excellence in the delivery of financial counselling services, and working with our members to understand the landscape of hardship in Victoria so that we can advocate for change. I'm grateful to all of our members for their work across our state, and I would like to thank them for their continuous work to advocate for the vulnerable in our communities. Financial counsellors fearlessly work on the frontiers of hardship, advocating for their clients and identifying gaps in regulation or corporate practices that contribute to or create the hardships experienced. FCVic works closely with our members to understand these issues, their impacts on our community, and what needs to be changed to create a fairer Australia for all. This report is an excellent example of this process in action, based on critical insights from many financial counsellors working in disaster recovery in Victoria following the October 2022 floods. We're grateful to be joined today by Financial Counselling Australia, the peak representative body for the profession, with whom we work closely on many policy issues, including insurance issues. I'd also like to thank the many community sector stakeholders joining us today, particularly acknowledging their key role in flood recovery efforts and programs across the state. Key regulators are joining us today, including ASIC and AFCA, with whom we work regularly to turn our members' insights into actionable policy reform across a range of issues. We recognise the important role that industry has to play in any process of reform, and we're also grateful to welcome representatives of the insurance and banking industries, including the Insurance Council of Australia. We look forward to our continuing constructive conversations, responding to the insights and recommendations from our Unsettled report. Finally, I'd like to recognise the role of state and federal governments in supporting the work of financial counsellors and our peak body associations. The Flood Recovery Financial Counselling Program is funded by the Victorian Government, and this report was made possible by Consumer Affairs Victoria. So with the thank yous out of the way, we can proceed with our event. To help launch our report, we are joined by Dr Daniel Mulino. Dr Daniel Mulino was elected as the member for Fraser in the Australian Parliament at the 2019 federal election. Before entering the Australian Parliament, Dr Mulino served the Victorian community as a member of the Victorian Parliament. An economist by training with a PhD from Yale University, Dr Mulino has several strong links to the issues raised in the Unsettled report. He was an economic advisor to Financial Services Minister Bill Shorten in the Rudd-Gillard governance, working on reforms to flood insurance and mitigation strategies following natural disasters in Queensland. Dr Mulino is also the chair of the House Standing Committee on Economics and its inquiry into insurers' responses to the 2022 major floods claims, which is the context in which I first met him earlier this year. Importantly, Dr Mulino is the member for Fraser, immediately adjacent to the Maribyrnong River. Thousands of people in the Fraser electorate were impacted by the Maribyrnong floods of 2022, and Dr Mulino has had a front seat to the immediate aftermath and ongoing impacts on community due to insurance claim delays and the inadequate cash settlements that are highlighted in the Unsettled report. So I'd please ask you all to welcome Dr Mulino to the stage. Thank you, Dr Mulino. Please make your way up. Over to you.
Thanks very much, Zil. And wonderful to be here today in front of such a large and expert audience, can I begin by acknowledging the traditional owners of the land on which we meet and pay respects to elders past, present and emerging. Can I also acknowledge ZIL and all of the work of Financial Counsellors Victoria, Financial Counsellors Australia, Financial Counsellors right across the country, of course. The roles that I've had over the last decade as an advisor in the Assistant Treasurer's Office way back following the floods in 2011, but also as a state MP and now a federal MP, I've seen firsthand in many, many different contexts how important the work of financial advisors and financial counsellors, are, how critical they are for providing people in very vulnerable situations, including the one we're going to be talking about today, but of course far broader than that. And so I just want to acknowledge all of the people who are here from FCV, but also all of the people who work in various capacities in that sector. To the author of the report, Dr Settle, it's an excellent report, and so I'll make some observations based upon my reading of it. But can I just say from the outset, I won't be able to cover all of the insights that you cover, but I can assure you that committee members in the House Economics Committee will, I'm sure, be looking very closely at your analysis and at your case studies and at your recommendations. And while I can't speak for the committee, I can say that a number of the recommendations jump out at me as ones that will dovetail very well into our report. Obviously, cash settlements are a major area which we've looked at and had a number of problems identified, so that this report is a very significant contribution and will have a significant impact on our report. And Madeline, of course, somebody who I know from my own electorate, but I know also who's contributed to policy thinking much more broadly in Victoria and beyond. She's provided evidence to the Victorian flood inquiry and to the House of Reps economics flood inquiry. She is somebody who has reached out to a number of individuals in the Maribyrnong area and beyond who have been affected, and can speak with a great deal of insight into how issues like the ones we're discussing today and more broadly affect vulnerable individuals. And of course she herself can speak from personal experience as to how natural disasters can turn someone's life upside down, and how we have to be very conscious of that when we are designing our regulatory arrangements. So look, I just wanted to make a couple of high-level observations to start, which is that cash settlements are, in a sense, one part of the ecosystem of how insurers and clients interact with each other, or one part of many possible interactions. But in a sense, I think there are a couple of more systemic aspects which are worth noting. And one is that, in a sense, a cash settlement and the problems associated with it can, to me, be symptomatic or reflective of broader issues. So we know that problems can arise and, based upon the evidence that we've received in our committee, have arisen on a number of occasions with initial point of contact, with insufficient clarity of communication and frequency of communication along the way, with lack of clarity around an assessment decision, with disputes around hydrology reports and disputes around expert reports, disputes around fair wear and tear and maintenance, internal dispute resolution processes that are sometimes not clear. And so there are all these different steps. But what strikes me is that sometimes cash settlements can be reflective of some or all of the above, in that the cash settlement can be the point where the client almost gives up through exhaustion. It can be a situation where they've found a number of blockages which they've pushed back on, a number of points of confusion, a number of points of opacity, or a number of points where they feel they haven't been treated justly. And all too often, I think that the cash settlement can reflect the point where the client, the policyholder, says, I just want done with this. And so in that sense, it is a point, but it can reflect problems right up and down the chain. The second systemic observation I think that's worth making, and this is something which is drawn out in detail in the report, is that a cash settlement in its potential inadequacy versus the cost of a rebuild, or versus the cost of not just a like-for-like rebuild, but building back better, given that building standards might have changed in the area, or that risks might have increased in the area. In a sense, the cash settlement can be reflective of other systemic things going on, such as the increased underlying risks of a particular area. And so the gap between a cash settlement and what is truly needed to put that client back in a situation where their life is back in order is, in a sense, another reflection of systemic issues. And so I think that, again, is something reflected in the report. So a cash settlement, in one sense, is a point in a number of interactions, but for me it's an extremely important point. And so what is a cash settlement? I was thinking about this as I was reading the report and reflecting on the report. In one sense, a cash settlement is a resolution, but it is a resolution in one sense not of the underlying issue. It's not a resolution in the sense that the person is now back in a home that's rebuilt or repaired or fixed. It's a resolution of the claims interaction with the insurer, potentially. But it's a resolution of that part of it. But in the mind of somebody who's exhausted, that might be a resolution to grasp at. But I think it's very important that we note that it's not a resolution of what is ultimately at the heart of this issue, which is that the person has a problem which they need fixed in some manner. And look, there are all sorts of complications to each case. It may not be that the exact identical house that they were in is going to be rebuilt in exactly the same form. But the point I'm really getting at is that even though in one sense it is a resolution, it's not a resolution in the core sense. And that's why for me Unsettled in a sense is a really powerful title, in that even if there is a resolution of a sort, it isn't a resolution ultimately of what needs to be ultimately achieved. The other thing that a cash settlement is a risk transfer, and that is a very serious thing. And sometimes that might be appropriate. I've got some friends who are builders, and I've got some friends who, you know, not many, but I do have some friends who are builders, and for them it might make sense, you know, and it might be in a situation where if building markets are working fine and they feel comfortable taking a sum of money, they might feel very confident fixing the situation to their advantage. But based upon what we know about natural disasters, based upon what we know about the fact that they so often align with a collapse in so many supply chains, in so many services, based upon what we know about the situation so many individuals and households and families find themselves in, how vulnerable they are. We know that if insurers are finding it hard to find builders, if insurers are finding it hard to determine scopes of work, if insurers are finding it hard to project manage, then if we're talking about something which is a risk transfer from a large organisation managing tens or hundreds of cases in a particular area to a vulnerable individual or household, then that raises, I believe, red flags. Now, as I said, it's not to say it shouldn't ever happen, but a risk transfer in that situation from the large entity, from the entity with a lot of capacity to an individual or a vulnerable household, that is something which to me is inherently tricky. And our regulatory system does have some guardrails, but I think this report points to the fact that we need to think about whether or not those guardrails at the moment are sufficient. So there are a couple of very overarching comments about the systemic nature of cash settlements and the fact that they're not just, for me, one point in a long chain of interactions. They're more than that, more important than that. Although it is important to regulate all those other bits too, but also that because they're a risk transfer, and when I say cash settlements really need to be regulated carefully, I want to stress I think it's particularly those ones at the end, the large cash settlements that are the end point of a transaction. I think there are still issues to be taken into account with small cash settlements along the way. They also need to have regulatory oversight, but for me the particularly problematic ones are the large ones at the end. Now, I just wanted to very briefly link it to the House Economics inquiry. There's a lot of parallels, I think, between the approach and the methodology and some of the findings between this report and our report. I think that at the heart of both this report and a lot of our, well, we haven't started writing the report yet, so I'm kind of foreshadowing what I'm very confident will come through in the end in some of ours, but I'm saying things that I'm very confident have come through in the public hearings. But there is something about the market dynamics in a market where you have a very complex financial product and where you have some degree of competition, but you have essentially a not huge number of large corporate entities interacting with individuals. There is a power imbalance there, which, as I mentioned, is reflected in our regulatory settings to some degree. But I think it also raises questions about the limits of consumer engagement. I think there are a number of regulatory interventions which rely upon disclosure, but I think we've always got to be a bit cautious about the limits of greater disclosure. I think providing people with more and more information has limits. And interestingly, I think, and this is not just a matter for insurance, this is a matter, I think, across financial services. The same is true, I think, for banking and for superannuation. I think people who want to see disclosure work better have sometimes pushed for more and more information. And in superannuation, for example, we've seen greater and greater flows of risk and fee data to the point where it's very hard to imagine the ordinary consumer can comprehend that. In other contexts, we try and boil information down into ever more simple and digestible forms. So, for example, there's the full insurance contract, and then there's the PDS, which itself can be quite a long document, and then we developed the one-page key fact statement, which was, I think, a useful tool, but it itself becomes somewhat limited in the fact that almost every policy looks identical when it's boiled down to one page, except some have the flood icon on them and some don't have the flood icon on them. So I just wanted to flag that I think disclosure is a powerful regulatory tool, but for me it's a tricky one, and one has to be very clear about how disclosure mechanisms are used in practice. I think it's very important that we test disclosure mechanisms to make sure that they're actually achieving what they are intended to. Now, there's one that's flagged, there's a number that are flagged in this report, but one that's flagged in this report, for example, is that when there are cash settlements offered, that there be a template and much more of a rationale given for where the figure comes from. I mean, that to me sounds like one which would be very comprehensible. That to me sounds like one which would make sense. And then I think the devil would be in the detail of what that template looks like. But so I certainly think disclosure mechanisms can make a lot of sense in different contexts. But I simply flag that disclosure has also been, in practice, problematic at times. I think this report's also similar to our report in that it reflects the regulatory complexity that we're dealing with an environment with state and federal laws. We're dealing with an environment where some regulatory interventions are through legislation, some are through a code of conduct, and some are through a regulator putting out regulatory guidance. And it's the complex interaction of all of these which we have to ultimately juggle. But again, that's not unique to insurance. I would argue that that's quite common across financial services. So that was something I thought that was reflected in the nuances of the recommendations in this report, but certainly something that I felt I'd seen come through in the submissions and the evidence that I have seen during the House of Reps economics inquiry. And the final set of issues that I think are referred to well and eloquently and clearly in this report, but that also have been coming through a lot in the House of Reps economics inquiry, are the systemic issues. So I think there's a whole bunch of reforms we need to look at to improve the way in which insurers deal with individual clients, better and clearer communication, more rigorous and fairer assessments, better dispute resolution, all of those different elements of the claims assessment and handling process. But there is also this elephant in the room that we have this huge legacy set of properties, households and small businesses and rural properties at very significant risk. Frankly, some of them at uninsurable risk. Now, they're there, and they have been there often for very long periods of time. For me, there's a systemic set of issues there that are very difficult to deal with. And I'm going to cite some numbers now which are not easy to verify. They're not universally agreed, but I think in broad brush, the mere magnitude of them is illustrative of the fact that I think we can all agree there are very significant issues. When you extract from the National Flood Insurance Database managed by the ICA, the number of properties at 1 in 20 year risk or more, it's something in the order of 230,000. If you look at the 1 in 20, 1 in 50, 1 in 100 or more, and 1 in 100 has been used as a kind of rule of thumb for you shouldn't develop at that or higher risk, it's something like 670,000 properties. That to me is a huge number. Now, even if we could snap our fingers tomorrow and stop any more development in 1 in 100 or higher risk, that is a huge set of issues to deal with. And you know, as Madeline will discuss, there's a number of properties in my electorate, but there are whole towns in regional Australia that face, frankly, existential challenges. And for me, this is actually going to take government at all three levels and industry and other stakeholders working together to fix, because we can't pass a law saying the insurers should just afford insure all of those at an affordable price. This is going to require, I believe, sophisticated intervention by government, and I'm not going to stand here and spell out how. But I just want to flag, I think the issue is there and it's big enough that we've gotten beyond the point where I think insurance markets alone can deal with that. I mean, the other thing I would say is that as useful as those numbers are, 670,000 properties, and again, I'm not linking that to how many people live there, but that's another piece of analysis. That's a huge number of properties at that 1 in 100 year risk. What to me is additionally scary, and something I don't think we understand well, is that if you were to fast forward that by 20 and then 50 years, how much higher are those numbers? I mean, we know they're going to be materially higher as a result of climate change, but I don't think we've got a clear sense of how much higher or where. So again, that points to me to the fact that in conjunction with a lot of the recommendations in this report, we are going to have to embark in parallel on a discussion around how we manage that huge set of risks in our community. And I think that in the report there were a few possible approaches talked about. One is that we need to take action on climate change, totally agree, and that's the big global ask. There's buybacks and resilience, which I would personally say I think we need to expand from their current scope. I think broadly it's the northern rivers and parts of Queensland. I think that has to be a part of the strategy. I think government intervention in insurance markets may be a part of it too. So there are a whole series of things. There's also household level mitigation. I think the insurance industry has acknowledged that they need to do a much better job of pointing households to particular measures which will reduce their risk, and as soon as they happen, they then need to, the quid pro quo needs to be that premiums have to come down. And the bushfire app, I think, is a start. It's not perfect, but it's a material improvement in that realm. I think we need to apply that kind of thinking and that kind of policy work in the space of flood. Look, I won't go through all the recommendations, but I just wanted to pull out a couple of things. One is that there's an interesting set of issues around standard cover and standard terms. Now, they're very different things, but for me, it does flag this question of I think product differentiation is important. It's an important part of competition, but there are some aspects of differentiation which I don't think personally lead to much competitive gain for the consumer. So, for example, I think there are a number of terms where they're used in different senses in different policies. I don't see how that kind of differentiation adds any meaningful competitive tension between firms or adds to consumer outcomes in any sense. So I think that standardising non-flood forms of water damage and providing much greater clarity around fair wear and tear and maintenance, for me, would be a sensible step forward. And I keep saying for me because I just want to make sure I'm not foreshadowing recommendations here, but I do believe that that is critical. Standard cover is a similar set of issues in that you do want policies to be able to be different across different insurers, and even for the same insurer to be able to offer different levels of coverage. But I do feel that we need to have a hard think about, are there some things which we should make it harder for there to be differentiation, where it's hard to imagine that an ordinary consumer is knowingly choosing between policies based on that. And I'll give you one example. I mean, debris removal was flagged in this report. That seems to me to be an interesting example. Another one for me is accommodation, temporary accommodation. Now, some policies have temporary accommodation until the case is resolved. Others have temporary accommodation for a year. Others might have different terms yet again. It does appear to me to, it just doesn't seem to make a lot of sense to me to put a huge risk on an individual in terms of their accommodation, when it's just not at all clear in some situations whether something's going to resolve within a year. And if somebody has a 1-year cap on temporary accommodation in a policy, I mean, the argument might be, well, that's slightly cheaper than a policy where there's a guarantee of accommodation till the point of resolution. But it does appear to me that somebody signing up to that may not even think through that at all clearly. It's probably just one clause in 50, but the consequences for that family could be absolutely dire if they then find themselves in a situation where having a very roof over their head is not guaranteed beyond the first year, and then they find themselves not having a resolution in the claim itself, having to find accommodation in a market where there may be very, very few housing options. And I've talked to any number of families, some in my own electorate, but through the course of the inquiry, families with children where disruption of housing in this manner can be absolutely debilitating and terrifying. So to me, that again is an interesting clause. I just query, how much genuine gain is there by having all sorts of different accommodation clauses out there? How much are people genuinely choosing between them based on saving a bit of money so as to put my whole family at massive risk if we don't happen to resolve the claim in a year? That doesn't, to me, seem like it's a particularly useful form of competition. I'm all for competition, but I query that. Difficulty accessing trades is another one, where if that is what's driving some cases of cash settlement, and this is a point I alluded to earlier, for me that's highly problematic in that I think it ends up becoming a risk transfer that is problematic. And then, as is talked about in the report, and I've alluded to this already, I think that where cash settlements are driven by household desperation or lack of trust in the process, they are not the solution. We need to figure out ways to build more positive interaction and more trust and better outcomes coming out of the system and not relying on them. And I think the phrase that was used in the report is that too often cash settlements are the default outcome in problem claims. And to me, to the extent that is the case, that's something we need to look at very carefully. And then finally, I think, as I alluded to, again, in relation to disclosure, for me, some better guardrails around cash settlements, around disclosure, around the reasoning, around the underpinnings of it, I think would make a lot of sense. So I'll just finish by saying that moving forward on cash settlements is, in a sense, moving forward on many systemic parts of the process as a whole. And it is going to require consideration of a number of elements of the regulatory system, legislation, regulations, the code, and to a large degree, insurers' own behaviour. Many of the recommendations in this report and a lot of the recommendations that my inquiry will make will be directly to the insurers, saying that on this front or that front, you just need to improve your systems or training or just lift your game. But finally, I just wanted to say I think this report usefully also steps back, and I think our report will have to step back and say that in addition to all of that work, we as a set of policymakers, as a set of financial counsellors, but also as broader participants in this risk management ecosystem, are going to have to think about those very large underlying risks in our society. And I think we're going to have to, on some of the fronts there, change the way we approach them, because I think there are some systemic issues there which are going to require a different approach. So congratulations on a wonderful report, and thank you in advance for letting me borrow some of your recommendations, but with full attribution.
If you'd just like to join me in thanking Dr Daniel Mulino again, I think we can all, well, let's do a round of applause and then I'll say something. So thank you very much. So thank you very much for coming and sharing your thoughts and reflections and some consideration, particularly on sort of your insights and reflections on the report, how that relates to the work you've been doing, you and the committee have been doing. Noting, of course, that it's not you only that's going to be deciding these things, so respecting the caveats that you placed very strategically throughout, but very much appreciate you coming and joining us for this event to share your reflections and speak about what the future may hold for some of the issues that we've identified. So with that, I'd next like to introduce our next speaker, who is the author of our report, Dr Antonia Settle. Dr Antonia Settle has recently completed a Mackenzie postdoctoral fellowship at the Melbourne Institute of Applied Economic and Social Research at the University of Melbourne and is now a visitor at the Institute. Antonia's research explores how the changing nature of household balance sheets interacts with household risk and focuses on household engagement with the financial system, including with superannuation and insurance. FCVic has been working with Antonia for many years in the disaster recovery and insurance space, including through our 2022 Forum Insurance in a Changing Climate. And I'll note as well, just on the moment, that we also have joining us today Dr Sandy Ross, who was the former EO of FCVic, who was very instrumental in getting Antonia involved and in a lot of the work that we at FCVic have been doing in the disaster recovery space. So just, sorry, mid-bio, but I just wanted to acknowledge Dr Sandy Ross. Where was I? Aha. Her nuanced understanding of the work of financial counsellors, of a post-disaster environment and of the insurance industry was critical to the research and work behind the Unsettled report. I was also very grateful to be able to attend a roundtable with Dr Settle at the ANU on natural disaster issues, so I also got to know Dr Antonia personally. So please welcome Dr Settle to the stage to speak about the report.
Thank you, Zil. Thanks everyone for being here. I'm really pleased to be here, really grateful for the support of FCVic for this report and for holding this launch, and absolutely very grateful to Dr Daniel Mulino for supporting the launch. It's an honour to have you here. Now, I won't talk too long. I want to just talk very quickly about why this report was written, what the analysis is that it offers, and a little bit about why it matters. Financial counsellors working with Victorian households that have been impacted by the 2022 floods have reported that cash settlements were one of the biggest issues that they were facing. That's why FCVic commissioned this report, to explore what's going on with cash settlements, because that was the feedback from the field. To be clear, some households prefer to cash settle rather than accept an insurer repair or rebuild. Usually that's because, as Dr Mulino mentioned, they themselves are builders and feel like they can do it cheaper than the insurer can. Financial counsellors in the field, however, report that the most common reason that they see households choosing to cash settle is because those households have been through long and bitter disputes with their insurer, and they ultimately have lost trust in the insurer to undertake repairs in good faith. And that's a bad outcome. Households are also forced to cash settle in a whole array of situations. For example, when their sum insured isn't enough to cover the cost of repairs, when the insurer can't find trades, and when the insurer's indemnity is reduced below the full cost of repairs due to exemption clauses. There's two things to say at this point. One is that households tend to do fairly poorly out of cash settlements, and by that I mean to say that cash settlement outcomes are often unfair, and that reflects the disadvantage that households face in negotiating cash settlements with insurers. This is clearly evident in the substantial increases in the value of cash settlements that financial counsellors secure for households. This is a consistent theme in my interviews with financial counsellors. Financial counsellors raise the kinds of shortcomings in cash settlement offers that households don't know to raise, and that results in substantially higher cash settlement values if a financial counsellor is involved. But you shouldn't need a financial counsellor to be able to get a fair outcome in the insurance system. The other thing that needs to be mentioned at this point is that the kinds of conditions that lead to cash settlements are on the rise as climate change pressures increase. That is, we will see more cash settlements in the future. That's because we'll see more underinsurance and more disaster-related claims, rather than the business as usual stuff of burglaries and electrical fires, which the insurance system was built to service. And that's the crux of this report, that the insurance system is not designed to address climate risk. As the system is dragged into covering climate-related risk, we see more claims going awry, because the sum insured won't cover disaster-driven inflation in building costs, or because there's not enough trades, or because, and that's the key point there, because people can't afford full coverage, because insurance premiums are being driven up by climate risk. So they end up with cheaper, patchier policies that are more likely to land them with a cash settlement. That means that cash settlements reflect frictions in the insurance system, because the insurance system is not designed to deal with climate risk. That cost, the stressful and often unfair outcomes that is a cash settlement, is a cost of system failure that is borne by households. This is a structural problem, and it's a problem that's going to get worse. I think it's also important to highlight that there's a set of material issues here about cash settlements outcomes undermining the economic security of households. Home ownership is the cornerstone of household economic security in this country. Poor insurance outcomes can devastate the long-term economic security of households. So that's a material problem. But there's also issues around household sense of fairness, about feeling like you've been supported by society, by regulators, by the private sector, by the community at large, or the opposite, about feeling like you've been cheated by the system. And that's more important than ever in this era of social and political fragmentation. That's also an overwhelming theme amongst households who are supported by financial counsellors. People feel cheated by the system, and that's also a very bad outcome. There's a set of policy proposals in the report that seeks to address the problem of problem cash settlements. Some of these proposals have been around for a while, such as standardisation. Standardisation of insurance products is critical. Financial Rights Legal Centre have done some fantastic work on this. Households don't know what they're covered for because of the idiosyncratic nature of legalities of coverage in the insurance contract. Standardisation of how information is presented, standardisation of terms, and standardisation of the product itself is critical to establishing norms about what is covered and what isn't, so that households don't find themselves with a surprise cash settlement. Other policy proposals in the report are less familiar to the standard policy asks of the consumer advocacy sector. These are highlighted in the report's executive summary. One is introducing a new service to support vulnerable households to navigate their cash settlement. We will see more cash settlements in future. There are many people in many circumstances who can't manage a rebuild, can't project manage a rebuild. They need dedicated support. Having an independent body like AFCA or ASIC commission insurer reports is another one. Expert reports are used as adversarial tools in the claims process. This is wildly inefficient. If insurers had to request an expert report via an independent body, households would be less concerned about bias in expert reports. This would build trust in the system and save resources, because we know that expert reports don't deliver unequivocal results. We know that from AFCA data. And it's important that households feel like the process is fair. I think the greater flexibility in insurer rebuilds and repairs is one of the most important policy proposals in this report. Get rid of like-for-like reinstatement, accept that we need betterment in the housing stock in an era of climate change, require improvements in resilience and in efficiency in rebuilds, and regulate that those changes are incorporated into all insurance products. That's a big ask. It's a reorientation of what insurance does, from like to betterment. But it's utterly irresponsible to rebuild like for like. I won't say much more. I hope that the report speaks for itself. A couple of final points. One is to state very clearly that we need to accept more regulation over the insurance sector. Insurers are at the coalface of climate risk. Let's not pretend that this is a regular private market. Weather-related risks are no longer amenable to hands-off private coverage, and we can see that very clearly in the cost of premiums. This is public policy. Finally, I want to acknowledge the input that this report has received from a whole series of experts who were named in the acknowledgements section in the first part of the report. I'm truly grateful, especially to those who have made themselves available to me on multiple occasions, many of whom are in this room. The experts that I'm particularly grateful to are the financial counsellors who supported this, especially Lila Martin and Kelly Davis, who gave me so much of their time. And that's a shout out to the financial counselling community more broadly. What amazing work that you do. I'm absolutely humbled by this corner of the community sector. Thanks for your attention, and thank you to Madeline Searle, who is going to speak now, and another amazing person in this space. Thank you.
And if we could once again do the same little routine. Thank you very much, Dr Settle, for your contributions, for your authorship, for your wisdom and insight and diligence in preparing this report for us. It's such a great thing to be able to partner with you and people in the intellectual academic space to again work with us across our stakeholder community, all financial counsellors, with clients and people who've experienced these hardships, to then be able to work across what we're doing there and turn it into actionable outcomes and really impactful, hopefully, reports such as these. So thank you once again, Dr Settle, for everything you've done there. As a consumer advocacy organisation, it's really important for us, as part of our core values, that we're recognising, we're speaking up for, and we're championing the voices of people in the community who are experiencing the hardships that financial counsellors are identifying. So we're very grateful to be joined today by Madeline Searle. Madeline Searle self-describes as an accidental activist. As one of the 1,500 people flooded in the 2022 Maribyrnong floods, Madeline pushed a pause on her career as a corporate lawyer in financial services and became the chair of the Maribyrnong Community Recovery Association to use her professional skills and expertise to advocate for the community's flood recovery. As part of this work, Madeline has been a strong and vocal advocate on amplifying community voices, pushing for representation in media, in government inquiries, in policy decision-making, and in changing the insurance landscape. She draws attention to the exhaustion, the loneliness, and mental, emotional, and physical impact on her community. I'm struck by one of her quotes: "Unless you had to confront the empty, stinking misery of destruction in your home, you have no idea what it's like to manage an insurance claim in that scenario." So please join me in welcoming Madeline to the stage.
Thank you. Here I am, a real live flood victim. I first want to say thank you to Financial Counsellors Vic. They are without doubt the most important first intervention for someone who's been flooded in a disaster. They need to be there day two, and they need to be supported and their funding continued for the foreseeable. There needs to be a standing workforce of financial counsellors available in disasters so that they can continue to intervene and assist. I think it's important to not presume that vulnerability is the defining experience of disasters. A lot of people are not technically in hardship or vulnerability, but they are still under profound economic, financial and emotional pressures. And as has already been said, Australia's economic prosperity is basically built on home ownership. And the moment you start to attack that, you start to attack Australia's economic prosperity. I think I'd like to sort of give you an analogy. First is a healthcare analogy. One day you find yourself very ill. In fact, it's catastrophic, and you find yourself in a hospital. And there's doctors wandering around, there's staff, but no one's telling you anything. But you're very sick and getting sicker. You're bouncing around, you're trying to find out information, you're asking people. People aren't actually telling you things, or they're telling you things that aren't actually right, or they're actually telling you things deliberately that are wrong. So what do? You keep trying, you keep asking, and then you have the benefit of interventions of people who are industries who are there for your benefit, such as FCVic. And I'd actually just stop to say that I want to make personal thanks to Anglicare Vic. They have been a defining assistance in Maribyrnong. Michael Hartley and Catherine Swinton have been absolutely magnificent, and they have literally saved lives, and they're continuing to work for us, and I can't be more grateful. So there you are in hospital, and you suddenly find out that you have a chronic illness, and you think, okay, what do I do now? Then you find you've got to leave hospital, and you wonder what to do next. But it turns out that your doctors actually had a really good treatment plan for you, a whole way to manage it, but they didn't tell you. They just sent you out there, and you're basically set up for another catastrophic failure. This is basically my experience of an insurance claim in a disaster. Now, I'm a smart woman. I am not vulnerable. I've been trained by one of the best law firms in the world, King & Wood Mallisons, yet I found myself within a blink of being tricked by my insurer. I have a house that's only just been cleaned and dried, and I'm at the process now of just trying to settle the actual build claim. I had to settle the remediation claim separately. And it's just unacceptable. I go back to the first principles ideas that I learned from a very fine mentor back at Mallisons, who reminded me that holding a licence, a banking licence, an insurance licence, is a privilege and not a right. I think there's a substantial departure from the concept of what you need to do under the social contract when you hold such a licence. And at the moment, I really don't see a cultural or a practical or a regulatory framework that is actually pushing good and decent results, both for the consumer, let alone for Australia. My experience of watching how my claim has rocked and rolled has been amazing. I have never seen a more disorganised industry in my entire life. It's absolutely shambolic. I can only speak of my experience of Maribyrnong and the thousands of people that I'm now in touch with. The waste of money, the waste of resources is beyond incredible, and it's disgraceful. The consequences of productivity, the consequences of retention of resources when we have a housing crisis, when we have this whole batch of insurers with their teams of builders under panel systems being held and worked through until the process you get to exhausted, you then have to cash settle out and go and find your own building team. You have a duplication that's just quite, it's disgraceful. It's absolutely disgraceful. We need to have systems where we have more efficient allocations of resources. So the productivity consequences of this just amazes me. The Actuaries Institute put out a report just yesterday talking about the affordability of insurance. I suppose because I'm a lawyer, I just have and I've tried not to take a tragic lens to my situation or my community situation. I've tried to take it as a financial and legal lens and try and work out why and how it could be better. I actually wonder how insurers' shareholders are going, in the sense that their shareholder funds are really being wasted by such a mismanagement of the industry. I actually think insurance companies could make more money if they just actually did the job properly and efficiently. I think the idea that the insurance companies are going to go broke and that reinsurance is going to make all of us uninsurable, I think it's a furphy. I think we need to go back to first principles and think about what we're trying to do. I commend Dr Mulino for his notion of the systemic ideas and the transference of risk. If you have the person who is least able to manage the risks being in charge of the risks, then you clearly have a problem, and you should take issue with that and start again. My particular story is in this report, and again, thank you so much to Dr Settle. It was quite cathartic talking to her about my issues. I very rarely talk about my own personal circumstances. I don't regard that necessarily as a safe place. My safe place for my disaster is in my community advocacy. I founded the Maribyrnong Community Recovery Association. We've got over 600 members and growing, and we are a voice for change, a voice for decency and change. So one of the things that we've tried to do is think about better, to think about the opportunities in all of this, and there are a lot of opportunities. For me, when I just presumed that I should build back better, that I would not want my house to be put into a situation that would inbuild failure. My insurance company said no. I was astounded, absolutely astounded. I said, surely not. I said, well, I'll top up the amount, shall I? No, you can't do that. You can't do that. So I was then forced into a direction, and I'm still in that direction, of trying to work out how to build back better. So it's really hard to do that, and I just cannot believe, as an industry, again going back to the social contract and the right versus the privilege of holding a licence, that the insurance industry has to move into resilience. I am completely over the idea that insurers don't have a role in it. If they are the controller of the risk, they need to be involved within management of the risk. Similarly, banks need to be more involved in this because they are a substantial participant, because they hold mortgages over most of these houses. And to that I'll just call out CommBank, who have been outstanding for MACRA in providing direct assistance to our homeowners. In fact, some people have had more money from their bank, CommBank, than they've had from their insurer, who've suspended interest payments or refunded a year of interest just to manage the distress of their homeowners, and to reflect that they want to restore and keep the asset to be prosperous and going forward. So one of the things that I've decided to do is convene a process for Build Back Better. And what I've started to do is work out how in Maribyrnong we could be better. Now, we can talk about the theory of this, as we have and we will, but I am really into practical outcomes because I have still a mess of a house, and as do many others. Maribyrnong has only just crossed into about 70% occupancy. That's not necessarily a success because many people have moved back into houses that are not properly restored because there are no standards for remediation, and because the cost of remediation sits within the insurers' remit. It's so easy for them to either not do it or not do it properly, and then as a consequence set up homeowners for a future exclusion of insurance because it hasn't been done properly. There's mould still there, or it hasn't been done to code. So what we're going to do is set up a project called Build Resilience. I have got the cooperation of Professor Sarah Bell from University of Melbourne. She's the City of Melbourne Chair in Urban Resilience and Adaptation. And I'm calling on the Insurance Council Australia, the Australian Bankers Association, and possibly some others, and I'll look to government support from Dr Mulino and our other local representatives. We want to build a house in Maribyrnong and to retrofit an existing property in Maribyrnong that is the defining gold standard of resilience, that completely brings world's best technology to show how we can be better. Because we are still there and we're going to be still there. It is unrealistic to move Maribyrnong, just as it will be unrealistic to move loads of other places that are going to subsequently find themselves at climate risk. So that's what we're going to do. I've got some very fine architects ready to go, and I'll have a master's studio going through a PhD student who's studying the Maribyrnong floods, Dylan Newell. So we will bring to the community an opportunity to see what can be done. And I want design to lead it because I want it to be beautiful. I want people to see what is possible. We have the example of the Queensland Reconstruction Authority, but that's a completely different climate. We need to adapt it to our own climate. So I think it's going to be very useful, and I think it's going to help people challenge the idea that when they can, to improve their own homes. And I see insurance companies having a really strong role in that, as Dr Mulino talked about the reduction in premiums because you've made some contributions. I also note that overseas we have insurers who are structurally put into the resilience model because they are responsible for diminishing the risk, and there are pools created for that specific purpose. So back in Maribyrnong, we have a very, very distressed community still, and we'll have so for quite some time. We didn't make sense because we're only 8K on the other way. Some of you may not have known it, not even realised it happened. We really were hiding in plain sight for a long time, and floods have a treachery because after the initial clean-up, everything looks quite green and clean, and you don't realise it's happened. I have members of the community tell me, I wish it had been a bushfire so people could see us. So, anyway, I think I go back to opportunities over and over. I go back to the lens of finance and law to see that there are better ways to make this industry more effective for its own shareholders and more effective for Australia in terms of productivity and prosperity going forward. I think we just can do better, and NACRA wants to be part of that. So thank you again to all of you who are part of this and part of helping us. So thank you very much.
Thank you, Madeline, once again for sharing your reflections, your experiences, reflecting on the opportunities that are evidently there available to reform and rethink the way that insurance is handled in Australia, particularly in the context of the kind of climate challenges that we're facing in the coming years and today. So if I could just ask everyone to once again give Madeline a round of applause for coming along and sharing. Here we are. I'm on my run sheet. I'm here to deliver some kind of a closing address. I don't intend to deliver a lengthy speech. I think we've heard very well from much better experts on the subjects from our report already. But What I did want to provide is something of a reflection again on what Financial Counselling Victoria is here to do, what the financial counselling profession is here to do, and sort of our role in bringing some of these challenges forward and continuing to work with all of our stakeholders. So I wanted to acknowledge that financial counsellors and the work that financial counsellors are doing across the state will continue to adapt and evolve and respond to the changing challenges faced by members of the community, and that we continue to work with all of our members to understand what's going on, to understand how the systems need to be changed to make the changes so that community members aren't experiencing these kinds of hardships into the future. We're also going to be continuing to work closely with all of our sector and community sector stakeholders and partners on so many of these issues, because there are so many interconnections between what financial counsellors are seeing and what other social services are seeing as well. We're grateful again to be partnered and to work closely with industry and to have conversations with industry, particularly noting Dr Mulino's remarks about some of the cultural practices and cultural shifts that banks need, that insurers may need to reflect on, revise their practices. And we're going to be there to support those conversations and to provide an avenue for clients and financial counsellors to provide that feedback directly to insurers, because again, that's our role. Our role is not to go and speak for clients or to speak for individual financial counsellors. What we're here to do is to try to bring in the perspectives of people in the community and financial counsellors, and make sure that the people who can change these systems can hear those reflections and can hear those experiences. And just before I do say my farewells, I also just wanted to acknowledge another member of the community who's come to join us today. So Ross Turner, who's a community member from Rochester, has also come along and joined us here today. And I think that's really important to reflect that, again, we're not here to simply speak on behalf of or speak for or speak over people in the community. We're here to support people in the community to speak for themselves. So with that, thank you all for coming and joining us today for the launch of our Unsettled report. I'd like to once again thank Dr Mulino, Dr Settle and Madeline Searle for coming and sharing your reflections on our report. And once again, I'd like to thank everyone in the room and everyone who's joined us on the live stream for coming and sharing in this launch with us. And I look forward to continuing the conversations with all of you about how we can continue to make Victoria and Australia a fairer place for everyone. So thank you very much.